Hello everyone, welcome back to our first price action based technical analysis of the year. It's fantastic to be back after the long holiday break, and I hope you all had a rejuvenating time with families and friends. Today we are diving into the XAUUSD chart, and in fact in 2023 we saw how gold showcased a dynamic performance navigating various market forces. We had geopolitical tensions, and in fact we also had easing inflation rates, which played a pivotal role pushing the gold prices up by more than 10%, marking its best performance in 3 years. Starting last year, we saw right here on the weekly time frame how the year 2023 started around the $18,024 level, rising into an astronomical high of about $2,160 before it finally closed around the $2,065 zone for the year 2023. And this substantial gain underscored the gold's role as a safe haven asset during times of uncertainty. So as we shift our focus to the year 2024, this asset here has already captured my attention with its resilience amidst volatile market conditions and the backdrop of a stronger US dollar. Now, the new year in fact promises fresh opportunities and challenges, and it's our task today to unravel the technical intricacies of the gold current position as we have priced back into a significant area around that $2,065 zone. As always, our analysis will encompass both technical and fundamental perspective using tools such as economic calendar, trend lines, key levels, and of course chart patterns to reveal the potential trajectory of price action in the days ahead. But before we proceed, I want to emphasize that this video is for educational purposes only and should not be considered financial advice. My goal is to provide insights into the XAUUSD chart, enhancing your understanding of price action analysis. Always remember, Forex trading involves inherent risk, so exercise caution and consider consulting a professional financial advisor before making any investment decisions. So with the groundwork laid, let's buckle up, traders. Our first dive into the gold's technical landscape for 2024 is about to begin. As we turn into the daily charts, in fact, you will see that it is clear that we are at a pivotal juncture in this market, and what I did here was to take into consideration the nature of price action since the last quarter of last year. That's an historical data of about 3 to 4 months, and it is quite clear that this market has been very bullish. In fact, we saw our price action transitioned into an ascending channel. Let's connect the series of higher lows here, giving us the support line of that ascending channel, and while connecting the series of higher highs, we have the resistant line of that ascending channel. And of course, when price action falls into an ascending channel, we obviously want to be looking out for patterns and structures that will support the idea of buying that asset. Now, in addition to this trend line is this key level, very important one right here, which obviously I will be using as a yardstick to guide my trading activity for this week, and that is that psychological level at the $2,035 area. And in fact, if you go to as far back as the month of March of last year, you will see how this level here had played a major role in determining the direction of price action. Now look at what happened here in the month of April. Look at it was more of a selling niche. We saw what happened here again, and then in the month of May we saw how that same zone became a strong selling niche at that point. And then when we fast forward into the month of November, then we saw that astronomical growth in price, which tested the highest point in recent times. And then that level again also was also broken, served as a buy niche at some point in time, driving price into the $2,080 area. And since the beginning of this year, we can see how sellers have taken over due to the resilience of the United States dollar, bringing price back again into that $2,035 area. So for me, this area is considered to be a crucial point where, depending on how market participants react to this particular level at the beginning of next week, will determine where our next line of action will be. So are we going to be seeing that same level at the 2035 continue to serve as a bullish platform, as it has always done since last week, to incite another wave of bullish momentum? Or are we likely going to be seeing a breakdown of both the key level and the ascending trend line to incite a sell-off? Well, to answer this question, I was able to identify a simple setup right on the 4 hours time frame, which we will be using to guide our trading decisions for this week. But before we go into the details, it's very important that we keep tabs with the fundamental factors that will be affecting this market sentiment. And of course, you know that by monitoring the economic calendar, we aim to pinpoint the potential correlations between crucial economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the assets on our watch list, that is the gold, we will be focusing on features from the US economic docket. Now, the first impactful event for the week will be coming in on Thursday, January 11, and that is the Consumer Price Index, which examines the average change in prices paid by consumers for goods and services during the previous month. And it is considered that a higher than expected CPI can lead to concerns about inflation, impacting market sentiment, as it may prompt expectations of tighter monetary policies to control rising prices. So this is one event everyone will definitely be looking forward to. Then the other one is coming in on Friday, January 12th, and that is the Producer Price Index, which of course gives us an insight into the average change over time in the selling prices received by domestic producer, of course excluding volatile food and energy sector. Then on that same day, we also look forward to the publication from the University of Michigan, and that is the Consumer Sentiment Index as well. So these are the high impactful events we will be looking out for the next week. And of course, as technical traders, we do know that the anticipation of such events usually reflect on the chart as price action. And talking about price action, let's scale down into the 4 hours time frame, where I said I was able to identify a simple setup that we will be using to guide our trading decisions for this week. And right here on the 4 hours time frame, I didn't really go that far, as I went to the month of November till this moment, and in fact I was able to identify a couple of trend lines here which emphasize the strength of the buyers in this market. So we have the first one right here after connecting the series of higher lows, giving me a beautiful one right here. And then the major one here is this one, which was recently tested during last week's trading session to push price to the upside. And of course, you know how we use our ascending trend lines. As long as price action remains above the trend line, we want to be looking out for patterns and structures that support the idea of buying that particular asset. Now, in addition to these trend lines, remember our key level at the 2035 area still remains very much intact right there. And so if we zoom into the current structure where it will be our center of focus for the new week, and that is you will see that since the second half of last week, we saw our price action remained confined within the 2050 and the $2,035 level to emphasize the uncertainty in the market during that particular phase of time. And of course, you know how we use our flat channels in this community. Whenever we identify them, we want to exercise patience and wait for either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line, which interestingly shares a beautiful confluence with the support line of the ascending channel we identified earlier, to incite a downtrend continuation. So you can see how crucial this juncture is in this market, as depending on what happens within this phase during the early hours of the week will determine what our next line of action will be. But trust me, I will be with you in the comment section as always to give you updates after monitoring how market participants will be reacting to this range during the first early hours of the new week. If you have found this content helpful and useful in making your independent trading decision for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so, and if you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you will always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.